Now let's go over to our guest today, Daryl Guppy. Daryl is a trader, author, financial columnist, television personality, and father of the Guppy Multiple Moving Average, GMMA trading concept. Daryl is going to be in the workshop this coming Saturday with eSignal Back in Black. You can sign up for this at eSignal.com. You go to eSignal.com, hit the education tab. Daryl's going to be speaking from 9:30 to 10:15, and he's going to be talking about trading back to black using trend. Daryl Guppy, welcome to TFNN.
Thank you very much.
Well, listen, I appreciate you getting up early. We have a great connection. Now, you're in Singapore right now, right?
No, I'm actually in Shanghai.
You're in Shanghai. That's a beautiful thing, man. Well, listen, we appreciate you getting up so early. You know, looking over, you know, and it's really cool. And folks, when you go over here, he has a website, and the website would be antsys.com. Tell us, what is that exactly does that stand for, Daryl?
Well, it's a combination of a set of initials of those of us who helped to develop this particular approach. We had the GMMA for quite a while, and we've been using it for many, many years.
Okay.
But it was time to move into a new area to add some more sophistication to that, and the ANT system does that.
I see. Cool. And you trade a lot of different markets. I see you trade the NASDAQ, S&P, Australia, gold, Shanghai, Singapore. Is there a difference in trading these markets? Talk to me about that.
There are some mechanical differences in the way that you may execute orders between those markets, but all markets remain pretty fundamentally the same, from a technical perspective, that is. And that means that we can apply the ANT system. With the ANT system, in the chart display, it actually looks like a series of ants crawling over the chart. That's part of the reason why we set on this particular acronym.
I got it. That's pretty cool. And, you know, we're talking a trend trading system, correct?
Yes, and what we do in this particular instance is we're looking at short-term trends, and we're applying it on an intraday basis. We find that we're capturing the major trends coming out of E-minis, out of silver, out of gold, out of oil. It's applying very successfully across commodity markets, index markets.
And is there a particular market that you particularly like to trade?
We find particular advantages in trading E-minis. We also find particular advantages in trading gold at this point in time. But the key factor is that we apply this with currencies as well. So what we're looking for was currencies that we're selecting at the highest levels of volatility and then applying the ANT approach to that. And we're finding that that gives us some very, very good returns, consistent returns.
And what do you think about the strength in the dollar?
Strength in the dollar is likely to continue. We've got an upside sitting at about 90 at the moment. But the key problem with the dollar is that it's developed a parabolic trend. And parabolic trends tend to collapse very, very rapidly. So on a weekly chart with US dollar, DXY, we're looking for it to move to about 89 and then the potential for a fairly substantial retracement.
Yeah, it's really interesting, man, because it looks like it wants to whack the 2010 swing high, and on a continuous contract, it's only like about 50 ticks off it, and it's wild. There's no doubt. It's like, okay, are you going to blow right through that thing, or in fact, you're just going to give it up here and now, you know?
That's right. We'd see a retreat from 89 back to about 85. The key factor there is that it's likely to be a very rapid retreat. So at this point in time, we're looking at it and we're ready to go short.
Now, you train a lot of different traders across the world. Talk to me about the difference in these different countries, and you know I'd love. It's just so intriguing. I mean, I have a lot of different guests on. I haven't had anyone on that with the type of experience, meaning that you've been in a lot of different countries, and there are smaller and larger markets. And what do they like to trade?
Well, everyone likes to trade things that are moving. That's the important thing. We're all trading volatility these days. But the key change that's taken place across markets worldwide is the lack of persistence of trends. The fact that trends tend to collapse very, very rapidly. So in the past, where we'd look at signals that were giving us 3 or 4 days warning, what we're finding is that these signals are moving much, much more rapidly. So the persistence of trends is less on a worldwide basis. And we think that's probably due to some structural changes in the markets around ETFs and HFT, high-frequency trading.
Wow.
The differences in the way different countries approach markets, well, certainly are to some extent. They're not major, Most of them are related to, as I said, the mechanics of trade execution. So, for instance, in Singapore, you still have that wonderful ability to settle 3 days after the trade, which means you can do what's called contra trading. Simply, you put an order with your broker, you don't actually put any money up front, and you let the broker close you out after 3 days, which actually means day 4. It's a wonderful way of trading without any cash.
Hold it. You got to talk to us about this. Walk me through this again. So, seriously. We might all be moving to Singapore. Hey, seriously, talk to me about this. How does this work again?
Well, it's a contra trade. That's called a contra trade. So it's because of a lag in settlement. They have settlement T+3.
Yes.
So that simply means that you put your trade on, let's say on a Monday, but you don't actually have to pay for the trade until close of trading on Wednesday. If you fail to pay by close of trade on Wednesday, then you'll be automatically closed out by your broker on Thursday.
Sure.
So essentially you've got 3 days of trading which you can do without putting any money up front.
Wow. You know, I mean, in the U.S., you know, years ago, of course, there was always a 3-day deal, but it was just the opposite. You had to put your money up, and even if you got out of that trade, you couldn't use your money for 3 days. And thank God it's not like that anymore, but that's really intriguing then. Wow.
That's right. And then in other markets, we have complete automatic electronic settlement. So if I'm trading in China, for instance, then it's money removed at the end of the day once the trade is completed. Same within Australia, for instance. So essentially it becomes a T+0 trading environment, although technically it's a bit longer. Key differences in terms of automatic placement of orders, the way in which stops can be placed and activated. So there are structural or mechanical changes across markets, but people seek to exploit the differences as much as possible. So, for instance, if you're trading on a China market, there's no intraday stops. Now, that changes the way you manage your stops. It changes the way you manage your risk.
Ooh, that's interesting. Yeah, no intraday stops, man. That's a trip. Holy cow. So now, when you say China, so they're trading gold at the Shanghai Exchange now, right?
That's correct.
So do they have stops in that gold market?
Yeah, in the futures market, they have stops.
Okay.
Yes, that's true.
Okay.
But on Monday, we're going to be the situation where residents in Hong Kong can trade the Shanghai market and Shanghai can trade Hong Kong. So these are one of the major structural changes, the structural factors between the markets that people have to take account of. We've followed and traded China markets for nearly a decade.
Yeah.
And, yes, we've had to adjust some trading methods to take in a different style of risk management.
Yeah, sure, because the premiums, they always said that the premiums were in the Shanghai versus the China market, right? And now that basically gets into flat now, right?
That's correct.
Yeah, that's pretty cool, man. And I know that. I mean, what does happen even in the U.S., a couple of these prop shops that particularly trade in the commodities, the iron ores of the world and all that, they're watching China really closely on a continual basis and just try to basically game it, you know, at our open, do you know what I mean? Which that was a much better deal about about 9 years ago, you know, because of the fact that you had all those differentials happening in Singapore, China versus the U.S., you know, when Rio Tinto would open up or BHP, you know what I mean? There's a lot of prop shops that's all they trade because you can get some great information out of China. So I'm sure that the way that you move around, you must see that quite a bit.
That's right, but those arbitrage opportunities have been reduced considerably.
Yeah.
As the world's become more connected, then the gaps are much smaller and are filled much more rapidly.
Yeah, sad but true. Now, where are you from?
I'm from Australia.
Australia, that's a beautiful thing. I like that, man. So talk to me about the Australian market. The Australian market, your real estate market's been on fire, right?
That's right. Although you talk to Australians, they say it's not a housing bubble. China has a housing bubble, but Australia doesn't have a housing bubble. I'm not too sure I agree with that.
I love it.
But there are some interesting trading opportunities that sit there, particularly in the real estate trusts. And again, they're a situation where we're prepared to go short. We're looking to go short on some of those.
Nice. Listen, folks, you can go to esignal.com. When you hit esignal.com, what you are going to hit is you'll hit the education tab. You're going to see Back in Black. This is a free webinar that eSignal is doing. It's on November 15th from 9 o'clock to 1 Eastern Standard Time. Daryl's going to be speaking at 9:30 to 10:15. Daryl's website, folks, is ANTSSYS.com. Check it out, okay? Daryl, thank you so much for being with us. Look forward to the workshop this coming Saturday, and look forward to having you on again.
Thank you very much.
And listen, man, thanks so much for getting up so early. We really appreciate it. You have a great day and a safe day, okay?
Well, it's a longer day than it used to be.
Definitely. You've got a long day. There's no doubt, brother. Okay, have a great one. Thanks again.